102.5 US cents now. Let's get some more now on what to expect from the session today. Chris Weston joins us from IG Markets in Melbourne right now. Chris, good to see you there. Just firstly on the overall market, what are you expecting? A flat open?
Yeah, I mean, that seems to be the case. Maybe a few points higher. I mean, 4,100 seems to be the line in the sand today. If we can get a close above that, you'd be taking that as a small incremental positive. But it does seem that BHP's ADR is going to open down about 14 cents. You know, Fortescue, their ADR, I'm not sure how accurate that's going to be because it wasn't traded in massive size overnight. But that looks like it's going to open pretty flat. And Rio, in its US listing, was up a modest amount as well. So going to be, there's no real lead indication there. I think probably the price of WTI, the price of Brent, up nicely from where we closed yesterday. We're pricing that up about 1.8%, given the drop in inventory numbers that have been expected there. So, you know, perhaps we might see a bit of buying in some of the oil stocks. Certainly the price of WTI should be supporting those valuations today. Obviously, retails will get some sort of modest bit of action today, given the jobs number. That's always a bit of a lottery in my mind. So, yeah, I think that could play into the situation. And obviously, there's talk today that in the Fin review that Harvey Norman might be looking to pick up some of those retrovision stores. It'd be interesting to see how shareholders trade on the back of that. I heard you mention just there that Transurban have come out with a slight increase in the PCP. So, yeah, that stock's obviously in play today. So, yeah, I think all in all, it's going to be a pretty flat day. It's going to be hard to really determine what's going on. Again, I guess in this sort of environment when you're seeing this sideways trade, low volatility, you can see that with the VIX down 4% overnight. It's going to be the dividend plays to come in. I mean, we've seen that in the currency markets. You're seeing that through Euro Aussie with a carry on a 3-month basis. 3-month rates have never been this high, so clearly the carry trade's working really well. It'll be reiterated in the clearly in the equity market as well. I mean, Telstra right now, the highest levels in quite some time. If you look at it purely on a technical basis, on its RSIs, trading at 77 at the moment, probably the highest of all the ASX 200 stocks. So clearly you can see where the flows have been going into, and that's where the yield is, and that's what you're looking to get paid in a sideways trading market.
And Chris, just on Telstra, confirmation that it is selling its New Zealand operations to Vodafone for 840 million New Zealand dollars. Those New Zealand listed Telstra shares in a trading halt at the moment. So yeah, I mean, looking at Telstra there offloading the New Zealand operations to Vodafone now, what do you think of that? I mean, you were just mentioning there where you see the stock going. I mean, it was up again yesterday. A real dividend play there, just continuing there for investors.
Yeah. Well, I think that's the case. I mean, in this, as I say, in this market, the yield, obviously the dividend yield has been coming off as the price has been rising in recent times. I don't exactly know. I think it's probably about 7 or 8% at the moment, but you know, it has been as high as 11 or 12 earlier in the year. I mean, you talked about the selling of assets there. I don't know the price. I'm not sure what the analysts were looking for. To be honest, I assume this is one that had been discussed for quite some time. So I don't know if this is a good price for the company, but you know, I think people have been talking about this for some time. So it's going to be interesting. I mean, I don't know how this is going to be in terms of an actual big mover for the company. Again, I mean, if you look at the chart, this is one that goes from the bottom left to the top right. It's one that you buy on dips at the moment. Can I get excited about it here? Perhaps not. I mean, if you're looking for capital growth, perhaps look to buy the dips. But if you're just looking to get paid, you know, this is still a good place to be, I reckon.
Yeah. So the price there, 840 million New Zealand dollars there, and that's going to return about 490 million dollars in cash to Australia. So yeah, we'll wait to see how Telstra trades then here in Australia at the open. Just looking then again at the jobs numbers, because obviously that's going to be pretty crucial, I guess, for markets today. We're hearing that we're not going to see any change in net total employment, but a slight uptick in the unemployment rate. How are you trading ahead of that jobs release?
I mean, trading around and positioning around the jobs release is perhaps one of the hardest things you can do. I mean, it's you know, the numbers are just so all over the place, to be honest. It's an absolute lottery in terms of how these come out. I mean, the range at the moment is Ausbil Dexia, one of the brokers, are looking for 20,000 jobs to be created. They're the top end of the range of the economists, and at the bottom end you've got Westpac, who are looking for a job cut of a job loss of 25,000. Again, we point to all the anecdotal evidence suggesting that we should be seeing job losses, but we could have said that last month, and we saw 38,000 job increases, which is great to see. I mean, you always celebrate job increases, but yeah, I think you can make an assumption anywhere. So I mean, if you look at where the risk reward is at the moment, you look at what's being priced into the OS market, 90 basis points of cuts still over a 12-month period. For some magical reason, the OS market's still pricing in a 60% probability of a cut at the July meeting, which I just think is completely crazy, the next meeting, which I think is just really interesting as well, and suggests that from a pure what's been priced into money markets suggests that the Aussie dollar should be trading higher than what it is. It does seem that the Aussie dollar is a very hard trade right now. We've seen a lot of people looking to short, and there just continues to be constant strength coming through there. It just seems that the path of least resistance for the Aussie now, and I've been saying it should be lower. It looks like it wants to go up. So yeah, I don't know. It's very difficult to trade around this. I think if you get a good job number, you know, clearly the Aussie dollar is going to have a nice rally above that 103 level. The trade right now, though, I mean, you're looking at a weaker Euro Aussie, and that's at record lows at the moment. I can't get excited around it because the 9-day RSI is now at 13, at the lowest levels in a long time. It's significantly oversold. Everyone's in that trade. Looking at Aussie CAD, I think Aussie CAD's a really interesting one. If we get a good number here today, we could try and see it break out the recent consolidation. It's been trading around that sort of 104.56 level, which was the June high that we saw back 29th of June high. We traded above it last night, but we couldn't close above that level. It's also the 61% retracement at the year's high. So I think if we get a good job number tonight, it could see us close above that recent consolidation, and we could see a nice move back up in Aussie CAD. So that could be a good trade to be, because it's not such a crowded one right now.
Yeah, that's some great thoughts there. Just finally, I wanted to ask you about the banking sector too, because we're getting these reports through from unions that NAB is set to launch a big restructure of its UK businesses. We know that they've been underperforming, a real problem for the NAB. What are you hearing? I mean, there's talk of hundreds of job losses.
I haven't heard, to be honest, it's not a story I follow too closely. I mean, the whole thing in the UK has obviously seen NAB have a big underperformance against the other banks this year. CBA seems to be the one that's trading quite nicely at the moment. It's having, you know, making higher highs, whereas the other ones haven't quite broken out yet. So that's probably the bank. Okay, valuations are probably a little bit stretched right now, but if you're looking for where the money's flowing, CBA seems to be the strongest of the bank. Perhaps that's to do with how it's paying its dividend, and, you know, it was obviously come dividend. But yeah, I think anything that probably saves money in the UK operations could be a celebrated situation. Obviously, it's not nice for people in the UK, but they're probably used to it now. It just seems everyone in the UK right now is preparing for job losses, and they're, you know, having these kind of contingencies in plans for in case that actually happens. So I don't think it's going to surprise anyone in the UK this has necessarily happened, but I think anything that can make these banks in the UK more profitable should be probably celebrated, and perhaps that could feed into the price today.
Just quickly wanted to ask you about the euro too, just back to currencies for a second there, where you see it going obviously under pressure. What do you think exactly it is? Is it the issues with, you know, Spain coming out with those austerity measures? Is it the result of the Fed minutes? What was behind the big fall that pushed the Aussie higher against it?
Well, I think it was some inflation numbers as well, which didn't help in terms of German inflation numbers. The Spanish situation probably net was a positive for euro, because it actually meant that Spanish 10-year yields dropped 24 basis points. You know, the euro made a new low last night, 122.13. It's had a bit of a bounce since that time. But I think at the end of the day, I mean, you're seeing record yields across most westernised situations. I mean, Austrian yields pushed down to a new low last night. German bunds pushed down 5 basis points. They're the lowest levels in about a month, still about 20 basis points from the all-time low. Because we're seeing that situation now where German bunds are pushing down across the curve against what was relatively flat trade on US Treasuries, you've got the situation which makes it less compelling to hold the euro over the dollar, because you've got that yield spread narrows a little bit as well. You're still getting a little bit there. I mean, probably fair value for euro based off a yield spread is around 124, but because we saw a tightening of that yield spread between German bunds and US Treasuries, probably takes a bit out of the investment case for the euro. The Spanish situation, you know, okay, but I think also you've got that situation where people are a little bit disappointed from the Fed. Amazed to me is because we didn't hear anything new, but some people had obviously been positioned for a more dovish Fed than what we actually heard, and you know, they saw that in the Dow dropping 90 points, saw that in gold dropping $13 just immediately after the release. But you know, I think if you're looking for a short-term trade, I'd probably actually be long euros, just completely counteractive what we're seeing. I mean, you've got this situation where the S&P's down 5 days in a row, the Aussie market's down 5 days in a row, European markets look like they want to push a little bit higher. Perhaps we're going to get a risk-on night tonight for some reason. I'm not sure what it's going to be, and that could push the euro up. But the balance of probability suggests we're not going to get a 6th day in a row.
Chris, will be interesting to get your thoughts as we go through the session. Thanks so much for that.
Thanks, Bobby.
And just a reminder, of course, of that news that you can see on the bottom